Customer point of view, the customer doesn't really care about the founder's background, right? Their successes or the failures of the past, or their net worth, or their education qualification and stuff like that. The customer is only concerned with whether their problems are met or not.
But still, you've been able to scale this company up to a large extent. You might not call it success, but I think for a large population and a lot of us, it counts as success itself. So, and in such a short period of time, what are the key metrics that you feel helped you achieve this kind of scale in such a short period of time? Hi, Raghu.
Hey, Vivek.
Thanks a lot for coming on to this podcast and helping us with your time. So quickly, Raghu, I wanted to know, of course, you need no introduction. You've been a very successful entrepreneur and twice over. And for our listeners, could you help understand what skills you attribute yourself to that has made you successful twice over? Like we generally see one startup wonders a lot, but hardly we have seen an entrepreneur successful twice over in succession. So what do you think is that you have in you that has made you achieve this?
Well, it's a tough question to start with, Vivek. I'm not really sure whether the second one is successful yet, right? And at least I think success is more personal, right? And the way I really look at it is success is more like a journey than destination per se. But having said that, there is a saying, right? When a mind gets expanded by an idea, it will never regain its original shape. Right? So once you get come across an idea and you feel that justice has to be done to the idea, then you don't hold no position, right? And most importantly, from the customer point of view, the customer doesn't really care about the founder's background, right? Their successes or the failures of the past, or their net worth, or their education qualification and stuff like that. The customer is only concerned with whether their problems are met or not, right? Whether the problems are addressed or not. If that's the case, then they go ahead and you go ahead and start the company, right? So that's more like it.
But still, you've been able to scale this company up to a large extent. You might not call it success, but I think for a large population and a lot of us, it counts as success itself. So, and in such a short period of time, what are the key metrics that you feel helped you achieve this kind of scale in such a short period of time?
Oh, so I think okay, probably maybe a good idea to even start off during my TFS days, right? I think it's more to do with perseverance and the determination, right? And when we started Taxi for Sure, we didn't know that you can make money from startups. All right, so there were no successful exits in startups and things like that. Right, so we never knew that you can do this. So why we did it was we gave ourselves a couple of years to see where will this go, and if it goes somewhere, we'll have a story to tell, which is what I'm doing currently. If it doesn't go anywhere, then if it goes somewhere, then we'll probably learn something. All right, and I used to be a consultant, then probably I would be a better consultant, right? Because nobody wants to fail, right? And if you are knocking on the doors of failure, you will leave no stone unturned to really make it a success, and because of which you will end up being a much better consultant than what you used to. So we gave ourselves 2 years, and that's how it started. But over a period of time, we have seen the kind of impact that we've had on people's lives. Not just the taxi drivers that we used to work with, but also the operators, our customers, and also our team members also. Right, with all that, I think it became a lot more enriching and a lot more satisfying. And during that journey also, right, so I've been that in the traditional sense, right, I was academically good, landed up a good job, went to one of the best B schools in the country, got a great job also from there. Right, I've been that way, traditionally speaking, successful on those merits and stuff like that, right, and everything was handed out to me on a platter. To an extent, but when you start a startup, it's a lot more challenging, right? And I think that journey was phenomenal because I discovered so many things about myself, right? And now I look at entrepreneurship, I see entrepreneurship as a journey of self discovery, right? I thought that I was good at something, but later I figured out that I was probably much better at a few other things. Until then, in my career, I never had to probably experience some of those at all, right? And there are places where I thought I was good at it, but later I realized that I was pathetic at it. But I learned a lot more about myself during that time. Right, and that's the reason. Suppose the exit, even though I was investing and things like that, right? It's very difficult for me to not to experience that again in my life. And I've seen a lot of my friends probably they will go through their entire life without even figuring that bit out about themselves. And here I am. I've got another opportunity to figure that a bit out. Right. So again, right, another quote here, right? So there is this quote that says that no man enters the same river twice. Because he's no longer the same man and it is not the same river.
Right.
Right. So when I was running Taxi for Sure, the way I was probably I'm a lot more different than that now. But again, I need to figure out a way to discover myself. So that is something that would keep going on, and that's the motivation to really start. Right, but the drive that comes to really continue building the company, continue working for the company, primarily comes with the kind of team that you build, the way the customers engage with you, right? And when you get married to the customer's problem and you think that you can figure out a way to solve those problems, right? That keeps the thing.
Any
going
major
on.
learning that you have taken from Taxi for Sure into Golf, which has helped you, fasten the process?
So the fast in the process, I'm not really sure. Things have been a bit more easier than Taxi for Sure days. I think in terms of access to resources, by resources I just don't mean capital. Access to resources have been a bit more easier, right? One capital because of my previous background, right? So a lot more VCs were willing to put capital in this. And secondly, building a team also was a bit more easier because of my past. Right?
Right.
So some of the people from my Taxi for journey, they came and joined this journey as well. And along with that, right, because of my past records, more number of good, interesting people came along for this journey as well.
Hiring
Right.
was easier for you.
The building a team is
Right.
became a lot more easier for us, and we made a lot of mistakes while building TFS. Right, I've learned those lessons. So high probability that I didn't make those mistakes.
Any specific one you would want to share?
So I think in TFS we built a team completely bottom up.
Okay.
Right, maybe because of lack of capital, or we always felt that as a startup we need to be frugal and we need to build a team bottom up. But when the scale came into Taxi for Sure, right, we didn't really have people at different levels to help us scale the business. So we ourselves become a single biggest bottleneck. The market was thriving, more customers wanted to take taxis, more taxi drivers wanted to be part of the platform. It's just that we didn't really have enough people in the team to manage it. So this time around, what we did was we built the team laterally, then bottom up, right? Laterally, right? We didn't do top down completely, but it's more laterally, right? Have a bunch of guys in the senior level, mid level, low level also, right? Than just doing bottom up itself. So that has kind of worked out significantly
Right. But
for us.
of course, everybody might not have the privilege of capital of doing this, so they might need to go bottom up itself.
So there
Any
also
suggestions for those?
No, it depends. Depends
companies?
on right. Equity is the biggest leverage, right? So and when we started Taxi for Sure in 2010, right? So not many people understood startups. Not many people understood ESOPs. Not many people understood equity, right? In the last 10 to 12 years, right, there has been a significant understanding in the ecosystem.
Yeah.
So people understand equity, right? Even and most of the guys are probably right, at irrespective of the levels that they are, right? So they don't have to necessarily work for to keep themselves not hungry.
Right.
Right. So they have the basic things in place, and those people are will be willing to work for equity, right? And you just have to really figure out who are those guys, because there is a tremendous amount of understanding about all the exits that have happened in the ecosystem, right? People have known that you can make money through equity also. So there are some people who are ready to take a bet on the future cash flows than necessarily worry about the current cash flows. You just have to pick on those people, and you should be able to build it. So that's how to go look at it.
Raghu, now moving on, I think now that there's a lot of talk about the funding winter, and we can see it very tangibly happening all around us. We've had an experience that I recollect from your Taxi for Sure days, where things were in a tight spot and you were at the receiving end of a similar situation where the funding was not enough for very, very visible future. So, any light would you want to throw on that episode, and how was your emotional state of mind, and how would you advise current set of startup founders who could be facing this right now or could face this in the next few months?
See, that's an interesting question. So our situation in Taxi for Sure was a lot more different from where the funding winter that's there. So probably I'll give a brief about the Taxi for Sure, the funding scenario,
Right.
Right? And then probably we can talk about the funding winter here and how it is very, very different, right? So Taxi for Sure, so we were in a highly super hyper competitive market. Right, and the competition had raised a significant amount of capital. Right, so they had even though the businesses looked similar to the customers, right, the business models were very, very different, and the way we were executing also was very, very different, right? And when push come to shove, when we started scaling aggressively and stuff like that, the market started responding to us. And we were also able to grow significantly well, right? And there were a lot of funds in the US who wanted to take a position against somebody who had invested in the competition, right? So they were willing to take. So we had all those things lined up also, right? So when I landed in the US to convert those meetings, right? So because we were constantly in touch with those guys, right? Week on week we used to give an update, and because that particular month, right, we grew like significantly. I think we grew 25x in 1 month.
Wow.
Right. So because of which, what really happened was a lot of people were willing to invest in us. When I went to the US to do the IC meetings, which was more of a formality, that's when the Uber Delhi incident happened.
Yes.
Right, and that put a lot of things, because the folks in the US, this is the first time they knew that stuff like that happens in India, but I think that it was the first time where a US company got stuck in those things. And given that it was serious money, 150 to 250 million dollars is what they wanted to invest, right? And because of the Uber Delhi incident, the local regulators were telling that the taxi booking app should be banned, right? So no investor wanted to invest that kind of money in a company where the local regulators are telling that it is banned. So what they wanted was regulatory clarity, right? But both of us know that it's so difficult to get that kind of clarity with regulations in India.
Yes.
So they wanted to wait for some 3 months to get till they get regulatory clarity, right? So that became the issue. That's where the cash flows was not coming in, and still now also I don't think so we have any regulatory clarity on that. It's been what 7 years now,
8 years,
right? 7-8 years. We still don't have regulatory clarity on that bit yet. So then the next best option is to really. So we had money in the bank. Right, one is to really figure out, right, continue running the company and exhaust all the resources. Then the only way for you to do an exit is to do a distress sale.
And how many months of money would you?
We had around 4 to 5 months of runway, right? And if you had continued to burn the way we had to,
right?
Right. If you burn that money, then the only thing that you can do is a distress sale. But the best way to really get onto a negotiating table is to have money in the bank and negotiate with your potential mergers and acquisition and stuff like that. So then you have some negotiating leverage. So that's more like it. Now coming to the current funding winter, right? So during so my understanding of the market is during the peak times, right? There will be 100 VCs chasing 70 companies, right? But during the winter, it is not that it's going to be zero, right? 30 VCs will be chasing around 10 companies, right? So that's how I would really look at it, right? Now what has really happened is, right, the Fed is increasing the interest rate. So currently, at least in India, the only way to raise capital at a serious level, at a higher level, is get money from the US markets. Right, so we don't really have homegrown Series B, Series C, Series D kind of investors. All of them are from the West. Earlier, it used to be from East and West. Now China is kind of blocked because of the policies. So it's only from the West. In the West, the Fed is increasing the interest rate. Because they're increasing the interest rate, most of the people who would invest in startups, in funds which will invest in startups, right, they figured out that they're able to get similar returns, risk-free, in the US market itself. So that's the reason they don't want to invest in startups, right? Because the interest rates are so high. So if you're getting a similar returns with risk free, why would they want to do it? Right? That's been the case. So the most of the people are not really parking. Now the question is, when will the Fed start reducing those interest rates? Then things would start getting better. But interestingly, in 2021 and 2022, a lot of funds raised significant amounts of capital, and those people are sitting on that kind of capital, right? And they want to really figure out avenues to start investing in. So as I told you, right? So all the funds are looking at those 10 best companies who are profitable, who are growing, right? Right. Those are the things that we want to do it, right? So that's the reason. Today also, I think Lenskart raised $500 million. Right. So money is there available in the market, but they pick and choose the companies that they want to do.
More discerning now.
Yes, more depth. So the funding cycles are taking a lot more time. The number of questions have increased, but there is no dearth of capital. There is capital, but they chase only few good companies, not all companies.
Right. Thank you for that. Raghu, now moving on to your own personal investment journey. Could you help us understand what was the first investment that you had made, like fixed deposit, or it could be anything?
Oh, my first investments was when I started working. Right, I think it was mutual funds. I started investing in mutual
Maybe
funds.
it was the ELSS or something.
SIP, not
Okay.
ELSS.
SIP.
SIP. I
And
started
which
with
year
SIP.
was this?
2003.
2003. Wow. And does that investment still continue by any chance for any?
I
Of
don't
course,
think
it
so.
won't
I
move your
don't.
needle, but
No, I don't think so. I don't think so. But my wife also did the investment at the same time, but she still continues
she
with
still
that
continues.
portfolio.
Okay.
So mine, because I had to do my MBA,
Right.
so I had to take out all the.
So
money.
any learning from that investment that you made or your wife made in terms of any understanding of how the financial markets work?
The thing is, I always felt that we should have started it way too early.
Okay.
Maybe probably the right age to do it is when you're 15 or 16.
Wow. Okay.
Right,
That's
start
very
early
interesting.
because it just gets compounded and you don't have to really work for it, right? One thing I learned during that time is I always felt that you need to work towards money. I never had this concept that the money can work towards you. Right, so when you start investing, there are other people who are working for you, and you just have to really figure out, pick and choose the right places to invest in. And when you have right wealth managers, right, if they are going to advise you the right places to invest in, right, you go ahead and invest in those places and do that. And if you invest early, right, you have probably a longer appetite. Right, in the long term, right, everybody gets to make money. Right, the money gets compounded. So one is you continue working, right, and you, along with working to earn money, you get whatever the money that you earned also to start earning money. That has a much larger compounding effect. Right, that was one super key learning that I had very early in my life.
Nice. Any bad investments you made? Any learnings from that? Anything which you can remember?
Marriage. No, I was just
We'll cut this off.
no, I was just joking. I just couldn't resist it. No, obviously, man, it's you learn. I think now I've come to this learning that successes doesn't teach you much because it's very difficult to figure out why you succeeded.
No, on the investment side.
No, that's what on the failures, right? You have a lot of learnings,
Okay.
right? You got to fail to learn lessons. Successes you just don't learn. You just get carried away and you feel that you know how to read the market and stuff like that. And sometimes you feel that you are the market maker also, right? When you fail is when you probably get on to the basics and fundamentals and stuff like that. So there have been tons of places where I've lost money, but what I lost in money I gained through experience.
But
and
any
learning.
specific incident that you might want to just
Multiple.
tell
I think.
for our viewers?
What is it called? The bonus share splitting.
Yeah.
Right. So that was probably the biggest mistake we did.
Okay.
Right, and that involved significant amount of
Yes.
capital.
So what did you lose in there, and what was the learning that you had from there?
So I think we were probably penny wise and pound foolish. There, right. So in order to save a few bucks, I think we took on. Large amounts of exposure
Disproportionate risks.
Large amount of exposure to one or two stocks, right? And even though the industry as such was doing really well, but these two stocks were not really moving, right? And a lot of liquidity got caught up in that.
Yeah, that's a very good point, because I think a lot of people try to time individual stocks, not realizing that specific stocks could move against that industry or the market
Exactly.
itself.
Exactly.
Right. And Raghu, now moving on
No,
to
there also, right? So apart from that, that was the biggest mistake. From the learning was to have a diversified
diversified.
portfolio instead of even probably, let's say that stock would have worked also, right? Probably it would have given better returns, but it's always risky.
Right.
In the long term, everything just gets evened out, right? It's always better to start having a diversified portfolio, have some liquidity, have some debt and debt related instruments, equity related instruments, have some immovable assets also, right? And have some investments in probably gold, which has always been increasing, and have some money left for some of your private investments as well. So have a very diverse portfolio. Keep looking at it so that the debt to equity ratio doesn't really go beyond your risk profile and risk assessment and stuff like that, right? So that mistake, I always knew that we need to be doing it, but never got on to do that. But that was one major learning.
Nice.
Around
And
that.
what's your view on these exotic asset classes like crypto, etc., which have been in the news for the last 2-3 years? Tons of investors have lost crores and crores of money into this.
See, crypto is as an asset, right? It's at a probably early stage. At least in India, it's still illegal to really own and operate and stuff like that. I think there's a new directive
Yes,
also now.
yes. But let's say if it was legal, I mean, would you still have
Right, so but
advised
in the US
people?
market, it is not necessarily there.
Yeah.
You just have to really figure out the use cases and probably bet on the use cases. I mean, you look at crypto as more of a currency, right? And you bet on the currency which you think is probably which is helping us get more, right? So currently USD is the universal currency. Everybody deals with US and stuff like that. And if any of the crypto becomes such kind of a thing, right, based on the use cases, we need to really figure out. And nowadays there are countries which are backing crypto with their local currencies as well. So those are some. So overall, crypto is not necessarily bad. You have to pick and choose which crypto that you want to operate and what you want to do and stuff like that, right? That's one part of it. And the second part of it is the underlying technology behind crypto, right? The blockchain that has much more use cases compared to crypto. We just have to again, right? Some of these things which are new takes time. Right. So, and if you are somebody who is a long-term investor, invest in those assets and probably set again have a diversified portfolio
But
there.
but don't you think it'll evolve when some new cryptocurrency might come out? It might not be the bitcoins or the ethereums of the world. It could
So
be something else.
there are exchanges where you can exchange your existing crypto to the new cryptos.
Okay.
Right. So that's always there, and that's the reason those things really make money. There are tons of crypto exchange platforms.
So
you hold on to certain thing and you exchange it to something that is working.
But again, what you're saying is something which needs a lot of understanding.
Oh, you have.
But what has happened is with all these crypto sites that mushroomed up, everybody started investing in it for a quick buck. So what's your view in that? Someone who's extremely well knowledgeable about these affairs should only invest into this?
You not necessarily knowledgeable, but someone has to really, if you're going to put your money, right, you need to have some basic understanding of what these instruments are, right? It's not just crypto, right? Even for the stock markets also, right? If you don't have that understanding and you blindly are going and investing, it's like real estate. You see some property coming up, you don't probably check the papers, you don't check the land deals and stuff like that. You just go and buy it because it looked fancy on a PPT. Right, so that could also tank if you don't go do your homework in any of the any asset that you invest in, right? If you don't have that understanding, if you don't go get into the depth of the matter, right? So then you have a huge exposure that it could tank. So not just crypto, any assets, right? Be it the markets, be it the funds, be it real estate, right? So everything has to be really checked out.
Yeah, thanks. That's a very good anecdote. So Raghu, one more very interesting incident that I remember you had made somewhere is that startup founders should be willing to cut their losses in case if they do not see things are, one of the important attributes is that cut your losses and cut them fast and move on to the next idea. I do believe that there was a certain bridge between Taxi for Sure and Zolve. And how did you manage to be so agile of moving out of that idea and moving into Zolve and making that successful? I mean, very few people I've seen, I come across a lot of very large individuals, entrepreneurs who have made it big. But the ability to cut losses and move on and accept defeat, I think that's something which is very difficult to find. So what made you move on from this bridge venture that you had and move into Zolve?
So good question there, Vivek. So one, I think post taxi for sure, right? I started doing a lot of angel investments, right? And I also sat on the board of a lot of companies, right? And so I started occupying a very unique position in the ecosystem, right? One was right, a fellow entrepreneur would treat me as an entrepreneur because I had run a business. Investor would treat me like a fellow investor because I've invested capital, right? So that was a unique position for me, so that I can probably balance the challenges between the two parties. Right, and that increases the probability of success between the two
Right.
things, because right, and that was one of the reasons why I didn't really take a full-time VC position also. If I become a full-time VC, then the entrepreneur will start treating me like an investor only. So then I would. So that's the reason for a very long period of time I started doing that, and that also helped out because in TFS I was so involved in day-to-day execution in TFS, and that was the only business that I understood in and out. And through angel investment portfolio, right, I had visibility across multiple businesses that were happening, and it was so very easy for me to really look at multiple businesses at the same time, cross-pollinate ideas, right, and some people were at different stages also. So it was a very good thing there. But right, over a period of time, I started realizing that during my childhood days, I used to play cricket and football religiously. Never once I was a 12th man. Right, I felt that in life I become a 12th man. I'm just seeing things happening. I'm not party to that, and that was one of the reasons why I wanted to really start a new company and stuff like that, right? And and what to start, right? You get an idea to what to start and where to start and stuff like that, right? So that's when you start experimenting with multiple ideas, right? One, there are certain ideas where you think that other people are not really doing a good job of it, so you can possibly do a better job at it, and you do that. Second thing is you start looking at some of the problems that you face personally, and you start building for it and stuff like that, right? You, because you have that room, you have the tendency, you can start experimenting a lot more and stuff like that, right? So that's the, so there were several experiments that I carried out, right? And eventually the experiment that worked out is the Zolve experiment. The market, the problem was larger, the market was larger. So here what you need to think is, I raised VC capital only for Zolve, all right, because rest of them were experiments only, all right, to try whether it does it make sense or doesn't make sense and stuff like that. So you do a multiple sorts of experiments, because experiments is what makes understand the problem and the solutions a lot more better. So I ran a lot of several experiments, but only when I got committed to only to the Zolve idea. Once I got commitment, I started raising capital. Just because I'm a right, I had a good exit earlier, it was probably easier for me to raise more capital. But I didn't want to raise capital till I'm committed myself to any single idea. So I waited for, I took my time to really get into that commitment, because I continue to do my angel investments also, continue to sit on the boards of companies as well, right? But I had to commit an idea. Once I made a commitment, that's when I went and approached the VC capital. So I wouldn't really put ask somebody else to put in money or resources and stuff like that, where me myself is not equally committed.
Okay,
Right, so the commitment is what drove me towards Zolve, and the rest of the experiments that were getting carried on.
interesting. Continuing on this, Raghu, like I believe, I mean, I know that you were a very successful startup investor also, and again, your strike rate in terms of identifying the right companies or good companies has been, exceedingly high. So, what do you see in an entrepreneur, and can you tell us about your best investment in terms of how many X has it become, and like what did you see in the initial stages that made you invest in that company?
So yeah, at least at the stage at which which I invest in, it's primarily people. All right, how good are the people? How well they know? How well the founders, co-founders know each other? Right? How passionate are they about the idea? Are they doing it to make a quick buck? Are they really doing it because they believe in the problem and they believe in the solution and things like that? Those things really matter, right? But you take a bet on primarily people. And what really has happened is, it's not that I've done some major analysis before I start investing in startup. It's just that once you start investing, right, good people know other good people. So referrals is as the one which is really worked out for us.
Networking. So
Not networking. So let's say a bunch of guys who worked with me, who worked along with me in taxi for sure, they went and started companies. Obviously, I started investing in those companies, and those some of the people who were working in those companies quit and they started companies. And because they knew the Ninja Card founders, they asked Ninja Card founders to introduce me to them. All right. So then it becomes like an ecosystem only. Good people know other good people, so then you start getting added and investing. So that's one part of it. Secondly, some of us entrepreneurs who have exited, right? We also share deals that is coming to us, right? That is also something that is really worked out, because some amount of diligence, some amount of people check and stuff like that is done by some of the other entrepreneurs also. That also gives good access to some good capital and stuff like that. And given that I work very closely with some of the investors, right? So they also share some deals which is not really their size yet, but they see that I can help them to get to the place where they can come and invest and stuff like that also, right? So the deal flow has multiple things. As long as you have a good deal flow, right, you pick and choose the companies that you want to really
but
do
most people believe in spray and pray.
that becomes a
And
difficult
which
thing.
is something you have not done.
So that becomes a bit difficult to do, because so whenever we invest, we want to the investment is not to really make returns on the capital that you probably put in, right? So while we were building taxi for sure, a lot of people helped us, all right, and we can't possibly go and help them, right? The only thing that we can do is to pay it forward, right? If you approach the startup investments with that mindset, then you can't afford to do spray and pray. Right? So invest in people whom you believe in, with whom your chemistry works out, so that you want to really help them succeed, right? In whatever capacity that they can, right? So that's what you do. So then spray and pray will never be able to work out, and because you're not really doing it. And touchwood, that's been the approach, but it's just that the startups have worked out really well. Some of them have given some crazy returns and stuff like that, but the relationship with the founders is so good that nobody has asked me to take an exit as of now. Right, so on paper it is there. I haven't really taken an exit, and probably it will continue to do the same thing.
But any advice for individuals who are looking to, dabble themselves into this space? Because it seems with Shark Tank and all of these things, it's become a very attractive thing to look at.
Well, it's a extremely high risky portfolio. By risk, I don't mean that. One has to really start looking at the long term, and compared to every other assets classes, right? This is probably the most challenging one, because your failures come sooner. Your successes, God knows when they will come. Right? If you invest as an angel investor, you invest in a startup. The startup which are not going anywhere, you will get to know in the first year, second year itself, post investment. The companies which will be like super big, super successful, right, you'll figure out only in the fourth or the fifth year. And as the adage goes, right, out of the 10 companies, only 1 or 2 will be successful, right? So you'll get to know, if you invest in 10 companies this year, you'll get to know that the 8 companies have tanked in the next year and after that, right? And by which your mindset is like, boss, even the 1 or 2 will not be successful. Right, and you need somebody who can probably take in that kind of a stress, right, are the ones should be doing it. And I'm not really sure whether somebody should put their entire net worth or the life savings into angel investing in a startup. That would be crazy. So you need to probably carve out some 10% or 20% of the net worth and start investing in. But look at long term, look at long term, look at long term. All right, and know exactly why you are investing and what are you investing for. Right, so that's been the case.
Raghu, now coming to your fitness regime, I think you have done the Ironman twice over, right? How do you manage to take care of such taxing fitness schedules with a very taxing work life also, because of the fact that I think it's always India, US based, so there is, I think you would be working through the night as well. So how do you manage this?
The Ironman, the course, right? The course doesn't discriminate. It doesn't discriminate based on what's your net worth, your network, or your qualification, how successful are you in life, and stuff like that, right? The course treats everybody equally. So the course only figures out what are you built of on that day, right? Just to push yourself, right? And that's what keeps keeps me excited and keep doing that. And also there are times when I go through this fitness regime where I on a strict diet and working out all the time and stuff like that. And there are times when I really don't do such intense training and stuff like that. But once in a while, at least once a year, doing something like that really helps you to focus on your health also, right? And I took up long distance running very very early in my life, right? So I am not a person who can sit and meditate, right? Whenever I sit and meditate, I sleep off. Right, it's very difficult for me to retrospect or introspect and things like that, right? But running is the place where even though you're running in a group, you just can't be talking all the time, right? So that's the time when you get to introspect, retrospect, and stuff like that, right? And at the end of a very very long run, right, you end the thing, you're physically you're tired, but the mind is significantly energized. Right, so then you start pushing it and you feel good, you feel light, you feel good about the whole thing. And throughout the day you really feel that energy in you, right? And yeah, so started with the running, then continued cycling. I didn't know how to swim, started learning swimming, right? Just wanted to really figure out how much I can push, right? And yeah, so that's been the case. So it always makes, because you're able to get better at what you do in the office. If you're able to do that, then you carve out time, right? You're not replacing your work time with that. If you understand what I mean, right?
Got it, yeah.
If you do that, you can be a better performer in your work also, because we don't do factory work, right? That it is so many hours, this is the kind of output kind of a thing. We do knowledge work, right? So your state of mind has a huge bearing on the quality of the work that you do, right? And if I do all those things in the morning, the entire day is amazing, right? And you are extremely productive, right? And you don't lose it, you're not short tempered and stuff like that. It has a whole lot of benefits, right? So that's the reason I still keep continue doing it.
Raghu, now coming to Zolve, like you built this company which helps Indian students go and set up bank accounts before even they land in the US, so which saves them immense amount of trouble, documentation hassles, convenience that they can start transacting the minute they land there. Could you tell us some anecdotes about the user profiles that you've got? What kind of challenges these students typically witness, because you are at a very good vantage point to give us some tidbits on this. What kind of are these students a lot on loans, and what's the repayment schedule of these guys in terms of how fast do they repay, and so on and so forth.
Sure. So Zolve is a cross-country, cross-border neobank,
Right.
right? So what we do is we help migrants get access to credit in the new country based on their home country credit score, right? Because the credit score is not easily portable across
Right.
different countries and stuff like that, right? And we as a company believe that credit worthiness of an individual is a reflection of their behavior, and location has nothing to do with it. If someone is coming from Delhi to Bangalore, right, they have the same credit profile, but the person instead of coming to Bangalore, if they go to New York, overnight they become high credit risk. That is very unfortunate, because the banks in the US don't talk to the banks in India, and the credit bureaus in the US don't talk to the credit bureaus in India, because of which there is an arbitrage where a low risk individual is treated as high risk individual. And that arbitrage is what we are using it as an opportunity to build this, right? So what we do is we acquire customers in India, both students and people who move to the US for work, get access to their credit history, figure out who are the low risk people. To them, we help them with a bank account, a debit card, and a credit card while they're still in India, so that as soon as they land in the US, they can start operating the bank account. They can start using the credit card immediately, right? And because of which, what would have taken 3 to 4 years to build a local credit in the US, with us it gets built in the first 9 to 12 months itself, right? So that's how it happens, right? And across the world, right, all the neobanks are targeting subprime customers, and they're still struggling to become the primary bank account, right? What has really happened for us is we are focusing on the Indians who are going to the US, who are actually super prime customers in the US, right? And secondly, when we give a student a bank account in India, as soon as they get a student loan in India, they want to move the money to the US, because currently they got a student loan at 82 rupees a dollar. If they keep the money in India, if it becomes 85 rupees, they tend to lose.
Right.
So as soon as they get the money, the only bank account that they have is ours. They move the money, right? And even somebody who moved to the US for work, right? On day one, when the office asks them, where should we deposit a salary? The only bank account that they have is ours. Opening up a Chase and a BOFA takes 6 to 8 weeks because you need to apply for SSN or a state ID. Then you need to apply for a bank account, right? And on the credit card, on the day you land in the US, you put a credit card on Uber to go from the airport to wherever you need to go. So we start off as a primary, right? Where all the neobanks are focusing on the subprime customers, still a secondary bank account. We start off as a neobank for super prime customers and become the primary bank account on the primary card, right? And there is a kicker. We are acquiring customers in India, right? So the cost is in Indian rupees. All the revenue that we make is in US dollars. Right, the bank account interest on the bank account. Whenever the credit card is changed, the interchange in the credit card. If they revolve, we make APR on them. So cost is in a low value currency, revenues in a high value currency, right? Becoming the primary bank account of the primary card, and for a super prime customer base, right? So that is what is currently working for us, right? When it comes to credit card bill payments, loan payments and stuff like that, right? The Indians who go to the US, majority of them want to continue to be in the US. Nobody wants to come back, right? So they just do the whatever is the right behavior. They do the right behavior itself, right? If you look at see India from the West perspective, right, the crime rate in India is probably one of the highest, correct? But all the Indians who go there, right, the crime rate by Indians in the US is zero. Nobody wants to do anything that would really make a mess out there, so that they don't want to give a reason for the country to deport them back to India.
The
So
same
everybody-
guy who might be doing a crime here will not do a crime there.
Exactly. Somebody would be defaulting in loans and stuff like that here will not probably do that, right? So that is working out. So that's the reason for our.
Just because enforcement there is better.
They just don't want to give a reason for the US government to send them back to India,
Right.
because they just want to be there, right? So because of which even the behavior of our folks is a lot more better than how they were behaving. So those are the things that are
And
currently
what's
working
the base, the customer base like in terms of distribution, students?
Students who currently in the last 2 years of our existence, right? The work visa for US, you know that, right? It was very difficult to get work visas, right? So because of which it's highly skewed towards students, right? So close to 80% is students, around 15 to 20% is working professionals.
Okay, very interesting. Raghu, coming to the last few questions now, what's your view on artificial intelligence? Now, the ChatGPT was there, GPT-4 is launched.
So this is generative AI, not just AI.
Yeah, so what do you
Generative
think about these in future, and any live examples of how you are benefited or your company in personal or professional capacity by these tools, or too early to say?
So I think generative AI is probably one of the big revolutions in the ecosystem. I think that everybody knows and stuff like that, right? Right. Obviously, the advantages are we still don't know how it will change our thing, and probably there could be a threat also. On the ChatGPT side, so we run a chat support system. So we are looking at integrating ChatGPT in our chat support to really make the conversation much more humane, right, and has a lot of customer empathy than just the bots that we used to use earlier. That's one thing. And some of the content and stuff like that we want to generate, right? Or we would possibly use ChatGPT going forward, right? Right. So probably some of the content and the marketing communication cost probably would reduce significantly with this, and we would be far more effective also in all this. And I think with the new ChatGPT 4 launch, right, some of the engineering work also can possibly get addressed. Right, I'm not really sure. I think because of ChatGPT 4. Even though it is really helping, I feel that we as humans will probably move to our next level of evolution. All right, because it becomes an existential threat for most of us.
Right.
Right. So because of which we will figure out certain skill sets that would probably take the human race only to a completely different level. And throughout history, we've been doing that. Right, from Stone Age to Iron Age, Bronze Age, and currently the IT Age also. Right, we always evolved. Right, when the factory started, people thought that humans will be replaced, but humans figured out more knowledge work, right? Now because of ChatGPT, the knowledge work is also probably getting compromised, but we'll always move, right? This threat of technology replacing humans was always been there in the ecosystem, but humans always figured out a way to really evolve from there and get there. So this is also probably we are at the cusp of something amazing happening within the human
Nice,
race
that's
also.
very hopeful words. Now, Raghu, what's your view on your retirement? Two things. One is your own retirement. I mean, you could have retired much earlier. And do you have any plans for retiring? And secondly, what advice do you want to give millennials or even baby boomers who want to retire at 40, 45, 50? Do you think it's the wise thing to do? And if so, any suggestions for them?
See, I think everyone is different, right? I've come across a lot of people who want to retire, right? The bigger question is what is it they want to do after retirement, right? And most often people want to pursue hobbies post retirement, right? And if the and people want to travel, people want to pursue hobbies, people want to do something that they love to do and stuff like that, right? And if you're and my sense is if somebody's planned to retire because of all those things, no, may not be the right reasons for you to retire, right? Because that day will never come.
Yeah,
If you want to
in
pursue
the early
hobbies,
podcast, we were speaking to Nitin Kamath. He was saying that 20 years back, I wanted to retire when I have 5 crores, have a shack in Goa or in a beach destination. But even after a lot of zeros, after 5, I have not been able to do that.
Exactly.
What you're saying.
exactly. So people, whatever they want to do, no, they should probably start doing right now. Pursue hobbies, pursue hobbies. You want to travel, travel now, right? Keep continuing doing that, right? That's there. But if retirement is a surrogate for financial security, financial well-being, and stuff like that, right? I think those people have to start investing. Right, so the earlier point that I made during the
Right.
beginning of this conversation, right? You work towards earning money, you put your money also to earn more money, right? And you start off as early as possible, right? That would be there. So whether you want to retire or you want to be have the financial security, whatever may be the case, but have that choice. Whether you want to continue to work, earn money, or you want to do something else completely different, right? Because we as individuals also evolve over a period of time, right? Having that option really helps. So my sense is the only way for potentially for people to do one is obviously run startups and figure out whether there's an exit. But if you're going to start a startup for an exit, that probably will not go anywhere. But the best way is to really start investing very early in life.
Nice. With this, Raghu, we'll come to the end of our podcast. But before we let you go, we'll ask you a few of your best and worst things. So, what's the best book that you've read ever?
There are multiple
One book
books.
which you would recommend everybody to read.
I think
Maybe two.
Robert's Livingston Seagull by Richard Bach.
Yeah.
That I think is very short book. That is
Yes,
also good.
very
Animal
good.
Farm is also phenomenal.
Sorry?
Animal Farm.
Animal Farm. Yeah.
I'm deliberately choosing two smaller books so that anybody can read.
Right.
Right. Otherwise, there is Hard Thing About Hard Things by Ben Horowitz.
Right.
Or somebody who subscribed to Ayn Rand. Right. Fountainhead is phenomenal.
Right. Yeah, you're a voracious reader. And do you watch podcasts yourself? Any favorite podcasts that you've got?
Oh no, not much. Not much. Not
Your
much.
favorite movie, favorite song,
Oh.
favorite startup?
Oh, there are too many, man. I mean, currently, I think the ChatGPT guys, OpenAI is like doing phenomenal.
Any on the Indian side, which is your favorite startup
No, Indian side, there are too many.
apart from Zolve?
There are too many. There are too many. Man.
Like
It's
any
very
one
difficult.
which you would like to just say that this is the one which I love the most, or I feel has the
No, I think there are too many contenders. There are founders who are like phenomenal. There are companies which are phenomenal, and there are people who are running the company in a much a different way. It's very difficult to pick and choose a single company that way.
okay.
Right? Yeah.
So favorite movie, favorite song.
Favorite movie, favorite song. Favorite song would be it's a poem actually. If only. If only Rudyard Kipling.
Yeah.
Right. So that's amazing. Right. Favorite movie. There are too many of them, man. So I'm more of a Lord of the Rings,
Okay.
Harry Potter kind of a guy.
Wonderful. Right. Thank you so much, Raghu, for being on this podcast. I think it was extremely enlightening. We spoke on a lot of subjects, and I think thank you so much.
Hey, thanks, Vivek.
Thanks.
I really enjoyed the
Yeah, thank
conversation.
you.
Thank you very much. Finance for most people is a dry subject, and people understand the benefits of investing, saving, right? But they don't know how to go about doing it. So it's always better to have somebody who's trustworthy, who can give the right kind of advice based on your income, your aspirations, your risk profile, and your financial goals in life. So for those people, I strongly recommend GoalTeller, right, to help them understand, navigate the complex codes of finances, and help them achieve their financial objectives without having a significant deep understanding of the finances. And why I can say that is their advisors personally helped me, and I'm hoping that it will continue to help me in the future also. So I've benefited, and right, GoalTeller has done similar kind of work with a whole lot of folks. And if you're somebody who really want to make the right financial choices, and really need somebody to help you, guide you along the way, I would strongly recommend GoalTeller.